Good evening, everyone, and thank you so much for joining us. And thank you, Andy and Faith, for having us as part of the Maxwell-Kates team to join you as the NYC Accelerator. Our agenda this evening is going to go through local building energy laws, and it's going to go back from the Greener Greater Buildings Plan up to where we are today with the Climate Mobilization Act laws. And then we're going to go into the program overview of the New York City Accelerator that has been around since 2015. And then we're going to touch upon financing, and my colleague Andrew Chintz is going to talk about that from the New York City Accelerator program perspective. And then we'll touch upon solar viability, which Jose will address. Then we'll pass it on to Kate, and then we'll Kate from Maxwell-Kates, and then we'll go into questions and answers. Next slide. All right, so Andy introduced me earlier, and I'm gonna just quickly reiterate. My name is Fatou Jabbie. I am a senior account manager with the New York City Accelerator program. And my team and I focus on mixed-use multifamily buildings, hotels, industrial properties, manufacturing and institutional buildings, houses of faith, office buildings, and commercial buildings across the 5 boroughs. What we're looking at here is a flow chart of a suite of laws that I'm going to touch upon at a very high level, and then subsequently do a deeper dive on each one of them. But a quick overview on those and how they fit together. In 2019, New York City announced a goal to cut its carbon emission reduction 80% by 2050. And this was based on Mayor de Blasio's vision in One City Built to Last, which includes a package of laws called the Climate Mobilization Act of 2019. And those laws include Local Law 92, 95, 96, and 97, and I will expand on that. And then, but for now, what I want to draw your attention to is looking at the coloring of the screen that we're looking at. It's a flow chart, and the associated laws based on that coloring. So from left to right, assuming we're looking at a building that needed to comply with Local Law 84, which is part of the Greener Greater Buildings Plan. Oh, we need to go back to the slide. Part of the Greener Greater Buildings Plan of 2009. So there's a building here on the left-hand side that shows a grade of D, which is letter grade of 47. And to the top left corner, it also shows carbon emission reductions, which is associated to Local Law 97. Subsequently, it is also showing benchmarking law, Local Law 84. Now, what these 3 laws have in common is that Local Law 84, 95, which is the Building Energy Efficiency Law, and Local Law 97, each requires compliance year over year. So I'd say imagining a building that needs compliance year over year for those. Subsequently, if it's 50,000 square foot and larger, it would need to comply with Local Law 87, which is the retrocommissioning law. That's the yellow arrow that follows the blue one. So retrocommissioning, Local Law 87 requires auditing and retrocommissioning every 10 years. And it is part of the Greener Greater Building Plan of 2009. If a building have a report that shows audits that have been done across all the energy consuming systems, the law requires that that building address deficiencies around retrocommissioning. The energy conservation measures or the water conservation measures are not necessarily required to be complied with Local Law 87. Now, imagine where we're today that feeds into Local Law 96, which is the red arrow, and that basically is New York City PACE financing, and that is part of the Climate Mobilization Act. This slide is meant to sort of integrate how these laws fit together and the synergies between them. So if a building complies with local law 87 and it has energy and water conservation measures, essentially they would need to be financed so the building can either realize energy cost savings, carbon emission reductions, and that's what the New York City PACE financing law affords buildings in the 5 boroughs. So following the path of the similar building, given the identified measures and the financing option, a building can have the opportunity to implement in either a building envelope retrofit opportunity, upgrading the walls and the facade or the window, or the building could subsequently look at Local Law 92 or 94, which is the Sustainable Roofs Law. And 92 and 94 are part of the Climate Mobilization Act. And if a project makes sense to implement either solar or green roofs, which I will expand on a little bit throughout my presentation, it can utilize not only the measures that have been identified from Local Law 87 using PACE financing or other alternative financing options. It just kind of outlines the fact that these laws are interconnected, there are synergies between them, and being able to leverage existing laws and financing them is going to help the building go through. Subsequently, we're looking at benchmarking. Same building that had a letter grade of D in the beginning of the flowchart that I was explaining, if this property has upgraded the recommendations that came from the auditing under retrocommissioning, and they were able to secure financing and look at building envelope upgrades or Local Law 97 or Local Law, retrofitting either with a green roof or solar, this property following the next year of compliance has an opportunity to reduce its building letter grade or improve its building letter grade from a grade of 47 to a grade of 75. And Local Law 84, 95, and 97 requires annual compliance. This sort of shows a flow of year over year how a property can go through and improve not only its building letter grade, but also comply with Local Law 84 and also address its carbon emission reduction potential by implementing innovative energy conservation measures. Next slide, please. Local Law 33 is an amendment. So Local Law 33 is the building energy efficiency rating, which is amended by Local Law 95. And this applies to buildings 25,000 square foot and larger. Similarly to Local Law 97, which applies to 25,000 square foot and larger, and Local Law 84, which applies to 25,000 square foot and larger, there's an amendment to Local Law 84, which I don't believe most of the Maxwell-Kates properties are covered under Local Law 133, which are buildings that are 25,000 square foot to, well, perhaps they could be 25,000 square foot to 50,000 square foot and larger. But the takeaway from this slide is that the synergies between 95, 84, and 97 is that on May 1st is the deadline to submit annual energy and water use data to the city under Local Law 84 to benchmark your building, okay? And subsequently, October 1st, as it relates to Local Law 95, is when building grades are made available by New York City Department of Buildings to building owners and decision makers across the 5 boroughs. And when those building grades are available on October 1st, by October 31st, it is a deadline for these grades to be publicly displayed for these buildings across the 5 boroughs. And if the grades are not publicly displayed, failure to do so will result into a fine of $1,250, and these violations are issued by the Department of Buildings. Let's go to the next slide, please. Talking about Local Law 92 and 94, typically also known as the Sustainable Roofs Law. What we need to know about Local Law 92 and 94 is that if we are looking at a new roof or a major replacement of the roof that goes beyond adding a roof membrane or coating, roof coating, meaning like a white roof or a blue roof, this will trigger the law to go into effect, meaning for the building to comply with either Local Law 92 or 94. If the building roof has too much shading, it is probably imperative to consider a green roof, because with too much shading across, coming from buildings around a building in question, solar may not potentially make sense from an implementation perspective. Also, another takeaway from Local Law 92 and 94 is that owners and decision makers can still consider either options, whether it be a green roof or solar, if the ROI, the return on investment and economics are attractive and help with Local Law 97 compliance for the building. Both solar and green roof will help with Local Law 97 compliance for a couple of reasons. One, green roofs insulate a building and can reduce heating and cooling loads by reducing energy use. Two, solar can reduce emissions coefficients on the Local Law 97 due to the on-site energy generation from installing solar panels and using that solar power on site. And third, solar PV produces shade in whatever area of the roof that it's installed, thereby reducing some energy use from the building energy consumption capacity. Next slide, please. So Local Law 97, which is their, it's the biggest and the boldest law that is part of the Climate Mobilization Act that puts a carbon limit on our buildings, particularly buildings that are 25,000 square foot and larger. And what the law requires is that the first carbon emissions limit, according to this law, will be applied in 2023 through 2029, so say 2024 through 2029 or 2030. And the second carbon emissions limit will come into effect and apply from 2030 through 2034. The lower limits of the law will follow in 2035 and beyond to help the city reach its 80% carbon emission reduction. The interesting takeaway from these compliance here is that the initial compliant phase, 2024 through 2029, the limit that's allowed during this phase gets substantially cut, almost in half, in comparison to the limit that is allowed from 2030 through 2034, and incrementally reduced from the limit that is allowed from 2035. Now, under existing conditions, meaning if a building operates the way it continues to operate from today, 75% to 80% of our properties in the city will meet 2024 and 2029 carbon emission limits. But this is a big if, right? Because we tend to change temperature settings in our buildings. We may not keep up with the upgrade of our building systems or building envelope facade requirements. So to rely on existing conditions and not to comply with the laws as it relates to 2024 and 2029 is a big risk. But this is just a study that's available so owners can start to look at what their pathway to compliance may look like if things continue to operate in business as usual, which usually isn't always the case. Subsequently, 25% to 30% of our properties in the 5 boroughs today, if they continue to operate as they are operating today, they will potentially meet the 2030 to 2034 Local Law 97 limits. Next slide, please. Now, what are the different pathways that building owners and decision makers have or need to demonstrate compliance with annual carbon emission limits according to Local Law 97? Number one, calculating the accurate gross floor area is really critical. And traditionally, the data, as I mentioned, the synergies between Local Law 84. We've been collecting building square footages over a decade now, as it relates to the greener, greater building law, greener, greater building plans that I've mentioned earlier. Now, with Local Law 97, it's critical to pay additional attention to make sure that that floor area is accurate. If it is misreported or misrepresented, there will be a potential fine from Department of Buildings that is potentially actually the cost to misrepresenting that is 50 cents per square foot per month, with equivalent of a false statement of 500,000 square foot. This is why it's really critical to hire a professional engineer or a New York State registered architect to verify this information for a project owner, for board members and decision makers to make sure that the gross floor area is accurately represented. Subsequently, part of the critical component to identify is energy use. The different fuel types a building uses is really critical because that's where the coefficients that carries a higher weight of penalty comes into play. We're talking about fuel types that relate to steam, natural gas, fuel oil, and electricity. I'm going to talk about a sample case study of a building down the line in my presentation that's going to showcase the differences of what those fuel type implications are. Additionally, building classification to the left of this slide shows the different building classifications that we have. Now, an institutional building versus a multifamily building or a business or commercial buildings uses energy in a different way. The law requires to really identify, especially for mixed-use buildings, what the different building classifications are for all these different areas, and identify the carbon footprint for each of these classifications, and the aggregated amount of carbon emission for each of these classifications is what determines the total building's carbon footprint. And that carbon footprint is compared to the limit of the building typology to be able to determine if you're over or under the carbon emission limit that the building needs to comply with by 2024, 2025. Building Energy Exchange has a calculator that helps any decision maker or anyone within the 5 boroughs to use that and plug in data to get an estimated penalty based on information that you input into that calculator. Next slide, please. Now, for Local Law 97, there's an exception. If you have a multifamily mixed-use building or a multifamily building that has 35% or more of rent-regulated units, a building owner may choose to follow the prescriptive path of compliance instead of the performance path of compliance. What I have talked about so far is focused on the performance path of compliance. Now, prescriptive path, according to the law of Local Law 97, has identified, I believe, about 12 prescriptive energy conservation measures that decision makers, energy engineers, or engineering companies in the industry can look at those prescribed measures to use as a compliance path if a mixed-use building that's a condo or a condominium has more than 35% of rent-regulated units. And again, this is an opportunity that when you work with the New York City Accelerator, along with your service provider that a building hires, we can help determine if a building falls within this exception of the law. Now, talking about the penalties, what the fines are based on. The $260 value is constant, and it is multiplied by the metric ton of CO2 that the building goes over its carbon emission limit threshold. And this is a threshold that you could actually find when you use the Building Energy Exchange calculator, or your service provider or energy engineering company can advise you on what that threshold is, so you can compare it with your building's carbon footprint. Next slide, please. Okay, implementation of Local Law 97. This simply shows an example of buildings with upcoming penalties and the systems and efficiencies that can be improved to help reduce the emissions and penalties that these buildings may face. So technically, the objective of this webinar is that as we're sharing this information and you're looking at your building stock, you may or may not know what thoroughly this means, but we're hoping that after this presentation, you could reach out to us, and then we will start the process in sharing with you what the key parameters are to look out for in your property to help determine what are the things that are critical for you to look at. But with this simple parameter that's showing, right? The law requires to look at the typology. The typology is the third column that's on this table. It shows 3 buildings. 55 Drive is an industrial building. 40th Street is a multifamily pre-war building that's up to 7 stories. And 69th Street is also a multifamily pre-war building. So the typology really matters. Any of these buildings could have also been a commercial building. They could have been a hotel. They could have a combination of a hotel and a multifamily building, or a retail store with a multifamily building. You get the idea. The second parameter that's really critical is the building area. That determines the square footage of the area, which really needs to be a combination of all the different occupancy types that I mentioned earlier. Because if you have a mixed-use building, you could have retail, you could have an office building, you could have a restaurant, and a multifamily building combined. And that total square footage is a combination of all these different occupancy types. Now, the other column to look at is the fuel type. The fuel type is towards the far right. I mean, all these 3 examples don't use fuel oil. That's why those columns are empty. But if you look at the very far right as well, all these 3 buildings use natural gas. And natural gas is a fossil fuel. So typically this building all these 3 buildings will face a much more significant penalty because they're using our fossil fuel compared to if they were using solar, for example, because it's on-site, it's generated on-site and it's renewable. Another thing I want to draw your attention to is that 55 Drive has penalties for 2024 and 2029. That's the first building on this table. There are some buildings that have fines for 2024 and 2030. There are some buildings that only have a fine for 2030. All right. Now, 48th Street and 69th Street have only a fine for 2030, just to kind of iterate the example that I have given. But the objective here is that regardless of what fines the building is facing, conservation, meaning energy conservation, is the first approach that any board member or decision maker should be considering instead of jumping straight through solar. So in this case, if a building wants to reduce its carbon emissions by improving, so it can comply with penalties from 2024 and 2030, one of the things that the building should be considering from a conservation perspective is looking at heating and cooling systems, perhaps wall constructions for the building, ventilation, increased ventilation given COVID, controls and sensors, energy management systems or building management systems, or even elevator improvements. And once those conservation measures have been explored, a subsequent opportunity to look at is solar or green roof. As I mentioned before in my previous slides, is that either solar and green roofs are really incredible strategies and innovative strategies to implement for compliance with Local Law 97. Next slide, please. All right, so this slide is basically meant to just at a high level highlight how buildings could meet the 2030 limit. So let's say your building doesn't need to meet the 2024, 2025 limit. I'll just kind of go through that just at a high level. So the first option, which is highlighted in bold, buildings already performing close to the 2030 limits. That means that those buildings don't need to comply in 2025. These buildings are typically very efficient. They're doing very well. And in order to meet the 2030 limits, the carbon emission reductions that they need to achieve is only 22% to 29%. And in order to achieve those emission reduction limit opportunities, the sample projects they can implement is in the middle of the column. They can invest in maintenance, lighting improvements, air sealing, installing low flow fixtures. These are low-hanging fruit, low-hanging opportunities, low-cost opportunities that really needs a little bit of tweaking and not much of a heavy lifting, because the building is truly performing a lot better because it doesn't really need to comply in 2024, 2025, and needs to plan towards 2030. Now, the second column talks about buildings that are significantly underperforming. And we know we have a lot of those buildings in this city. If you're in a building that isn't performing as well and it's underperforming and it falls within this quadrant, it will need to do everything above that I have just mentioned, plus integrating roof insulation and air sealing, looking at heating and system controls and sensors, also replacing heating systems with more efficient systems. And for buildings that are in this category, they would need to reduce their carbon emissions 29 to 48% to meet their 2030 limits. Now, we're talking about the third quadrant. These are buildings that are really struggling. And we also have a lot of buildings that are like this. These are class C and maybe potentially class B buildings. And buildings in this quadrant really need to go above and beyond. And the accelerator can help in this capacity. Again, we don't know specifically as account managers with the accelerator program as to how we can help or what we can do. But when decision makers and board members reach out to us, we can collectively collaborate with service providers to start identifying opportunities as to what we can do to help buildings that are in this quadrant to start looking at compliance with 97. So, and for buildings in this quadrant, we're looking at 44% to almost 66% of GHG reductions that they would need to achieve to comply with 2030 limits. It's substantial, but that doesn't mean it's not doable. But that just means that long-term planning in terms of looking at a roadmap and a pathway becomes so much more crucial. And we can absolutely help with that as the New York City Accelerator. Next slide, please. Oh, great. That just puts me back into my long-term planning slide. Long-term planning is basically looking at your OPEX budget versus your CAPEX budget. If you have budgets, projects that fall in the first quadrant that I talked about, that are buildings that are performing very well, you're looking at low-hanging fruit opportunities. You're looking at low cost or no cost retro commissioning opportunities, looking at deficiency that you can remedy through local law 87 compliance track, or perhaps a local law 97 roadmap or pathway to compliance. What I want to draw your attention to here is that when it comes to long-term planning, we're looking at optimizing existing systems, because you got to look at what you have in place today before you start looking at what you could do tomorrow, because they can be, it's obviously cost related, and you want to do things that you can afford now that are not cost prohibitive. But if they require capital investment, which is part of a long-term planning strategy, you can integrate that as your capital improvement plan. On this slide, it just kind of, if you can highlight just at the bottom quadrant, we're looking at existing systems, common areas. So you identify what are your existing systems, what are the existing conditions, the second column, and what are the energy efficient retrofit recommended upgrades, right? And then when you hire a service provider, and the New York City Accelerator account managers work with you as a decision maker, as a building owner, with the service providers to really look at some of these measures that are being recommended. What can you do in 2022? And that's what the 22 quadrant shows. So those check marks looks at the financing, the return on investment, how that relates to your local loan 97 compliance in 2024 and 2029, which is the second quadrant, that the two buckets that are empty over there that we're outlining here. It's a collaborative effort, and as much as we would like to zip through this process and think we have all the answers, it really is about, it's, different layers that we have to peel through to kind of identify where the opportunities are, so that eventually when you circle back with your board members, you can have the right decisions, right information to make decisions that are financially responsible to help you move forward. With that note, I will pass it over. Let's go to the next slide. I believe I'm going to pass this over to my colleague. Actually, not yet. I'm going to go over the overview of the New York City Accelerator. So the New York City Accelerator program is a city-backed program that is designed to help control cost, meet local laws, but more importantly, increase energy savings opportunities, reduce carbon emissions reductions from our buildings across the 5 boroughs. As account managers, which is, I am one of many account managers within the New York City Accelerator program, and I believe I have my colleague Valerie and Alan also here that work with multifamily buildings and residential buildings in the city. I mean, we provide free technical guidance to help the market transform how existing buildings operate and how new buildings are built as well. We also look at our different suite of laws under the Climate Mobilization Act and the Greener Greater Buildings Plan program from the time of Mayor Bloomberg that I talked about, while working with service providers, and we may have some service providers with us in this webinar, and decision makers, which are board members that are in this event right now, facility managers and property management firms, which Maxwell-Kates is one of them, to really identify building upgrade opportunities so we can help you meet carbon emissions limits and reduce that cost and invest that money where it makes the most impact. Now, we also identify applicable financial incentives, and these incentives come either from NYSERDA, from Con Edison, and the financial options that we really also look at is the New York City PACE financing, which is the bottom bullet that we have here. And PACE is part of the Climate Mobilization Act that got introduced in 2029. All right, so next slide, please. Available resources, right? I talked about Con Edison. These are incentives. When an energy audit is done for a building, or a local or 97 audit is done for a building, it identifies the conservation measures that are available, that are opportunities within the building. Con Edison will pay for incentives for some of these measures. The accelerator will help you pursue some of these incentives so you can reduce the capital cost that is related to some of these projects. Instead of paying 100% of the cost, you may end up paying 25%, 30%, or 40% of that cost. And that's part of what we offer as an accelerator program. Next slide. Here you go. Service providers. I talked about service providers. This is a partnership. We can't do the work we do as an accelerator without service providers. And the work that the service providers do are really directed by what energy conservations makes sense for the different buildings that we work with. And the list that we have here are energy conservation measures that we consistently talk to service providers about. And some of you may already be working with service providers that you absolutely like working with. And we encourage continuing that relationship. And it makes the process a lot smoother. But if you're interested in looking at other service providers, so you can compare proposals, we can help you with the proposal analysis. And we have a link that shares service providers that are part of the New York City Accelerator program that Andy and Faith could share with you after this event.